Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, the regulatory landscape, and capital markets. This segment is presented by Charles Schwab. I'm your host, Jill Malandrino, and joining us this afternoon, we have Frank Holmes, co-founder and Executive Chairman of HIVE, Petr Kozyakov, co-founder and CEO of Mercuryo, and Carter Feldman, founder and CEO of Psy. We're here to discuss Bitcoin mining as it continues to mature. Industry participants are navigating a rapidly shifting landscape shaped by regulatory changes, sustainability concerns, and advances in technology. We're going to discuss the intersection of mining operations and treasury strategies as it has become increasingly dynamic, prompting organizations to innovate in both energy management and asset stewardship. It is great to have all of you with us. Welcome to Trade Talks. Frank, great to see you as always. Give us a high-level overview of how you perceive the Bitcoin mining environment now.
Well, I think the Bitcoin mining in particular, they had the first mover advantage. They unlocked stranded electricity. And if we take a look in West Texas in Abilene, surplus gas, flared gas, wind, solar, and who goes there first are Bitcoin miners. Now there's a $500 billion mega spend for AI. So if you take a look at CoreWeave going after Core Scientific, it's because they were original Bitcoin miners. So Bitcoin miners are very important in the chain. And what we're seeing is a re-rating that's taking place in Bitcoin miners.
Yeah. And Peter, how do you perceive the current Bitcoin mining environment now?
Well, I think it became really harder to mine it now after the halving last year, and it is getting more and more institutional. So it's not like before in crypto that you just try to find the best equipment and this is it. So you've done it and you can earn a lot. So you can find a lot of friends mining around you. Now it's purely institutional. So all those people, your friends who tried to mine something, the majority of them lost money. So now it's a game about costs, about better buying equipment, about energy and being efficient.
Yeah. And Carter, I'll ask the same question of you as well through, the lens of how Psy perceives it. How do you think, the Bitcoin mining environment stands right now?
Well, I think it's just becoming quite cutthroat, right? So as some of the other guests mentioned, if you don't have the latest machines and the cheapest electricity, it's either not profitable now or it's not going to be profitable very soon. So at least for us, we see it as a great opportunity for altcoins with potentially a larger upside to come in and, take up some of that, more expensive electricity.
So it sounds like it all comes down to, when you think about the evolution of the mining landscape, it all comes down to economics at the end of the day.
Absolutely.
Yeah. Well, so then, Frank, it makes sense that you're seeing it shift to more institutional miners because, from an economic perspective, you're not going to be able to compete with that otherwise.
I think the institutional element comes in that most of the shows up as index Russell 2000 players. But what we're seeing is some of the players like Iris Energy is capturing for the AI spend. So if you have electricity that is a long-term contract that is stable, not variable, Bitcoin mining can deal with variable energy. HPC AI can't. It has to have steady stream electricity. They're becoming extremely valuable. What we've seen with TeraWulf, with nuclear energy, and Google partnering with them, a massive re-rating. So really, Jill, I think the cheapest data center multiples on revenue and EBITDA multiples are the Bitcoin miners when you compare to just pure data centers. These things trade at 1.5 to 5 times, and the data centers are trading at 20 to 30 times. So I think that we're going to see a lot of bidding coming in who has stable energy.
Do you think, Peter, that the regulatory and industrial developments are a catalyst behind the shift that we're seeing within the mining space?
Definitely. We've seen it that regulatory uncertainties, they harm mining. So we saw it in 2021 and 2022 in China. So and when we have straightforward regulation, and with the latest acts, when Bitcoin becomes the reserve in the US, so it is really a good space for institutional players who can plan and invest for a long time to come in.
Yeah. Carter, are the mining environments different region to region?
Absolutely. I would say definitely out here in Asia, there's a lot less regulatory certainty, but there can also be a lot cheaper electricity. So you get some risk and some additional reward there.
Carter, you also mentioned that having the right types of tools. Give us an overview of what you mean by that.
Absolutely. So I would say, like, first and foremost, you need to have the latest and greatest equipment just because it's efficient enough to be competitive with other people that do have the equipment that is able to match that speed. So if you want to hit a certain hash per kilowatt hour, then you're going to need to have the best equipment and the newest stuff, right? Because the more hashing that's going on, the higher the difficulty is going to be, and you'll find yourself crowded outside of the competitive hashing market.
Yeah, Frank, it's interesting. It sounds like it's almost more of a technology and energy story in the Bitcoin space right now, more so than the asset itself.
Well, we function over 9 time zones in 5 languages. And so we have a good feel for what some of these regulatory issues are in different jurisdictions. But I'm really sure with Carter, it is about what's called energy efficiency of the machine. The biggest line item for Bitcoin miners is the cost of electricity. The cheaper electricity, even old S9s are profitable at 2 cents electricity. So since Putin invaded Ukraine, electricity prices everywhere in the world went up. And then we have the boom in AI, and then they've notched up a little higher. So electricity is the number one, the cost, but then you have to spend money. And we do this on a regular basis on the latest machines that have the best efficiency of energy. That's the only way we're going to compete.
Yeah, well, it sounds like that statement aligns with the administration's agenda of being U.S. innovation first. Could also be a national security priority as well, if you want to think of it that way too. But it sounds like it aligns with the frameworks that are being developed as it relates to the U.S.
Are you, so is that for me?
Yeah. I was just following up to what you said. Yeah.
Oh, sorry. I think that the regulatory world is slowly, the Genius Act will, that's very profound, and it will have a significant impact because you're seeing in Sweden questioning why they've been so anti-Bitcoin mining, and same thing with Canada. They've also been anti-data centers, period. So now we're going to see a change taking place. But what's really exciting, Jill, is an intersection of military spending for AI, and the value of data centers is going up along with NVIDIA chips for the respend of refurbishing our military. You need these chips and you need data centers for all those drones to work and autonomous vehicles. So we see the spend is going to continue and the value of the data center. So that's one reason why we've expanded our HPC in Canada with Bell Canada.
Yeah, and Peter, I would agree with Frank there that it's really the technology story that's leading here. Data center demand, I think, is going to double by 2030. That's only 4 years away. This isn't something that would be nice to have. We have to be able to provide the energy for this.
Well,
Yeah, sorry, Frank. So I think that it is really important that there is also technology in place, because when you have the best machine, but you also need to properly, if we are talking about mining, you need to properly analyze when the best time to mine, when are the downsides and other things. So the technology is also there, and it is hardware, but software is also important, as well as other things. So, and it is pure tech business.
So Carter, what are the pain points then?
I would say first and foremost, it's just that you have this big capex upfront to buy the machines, and then some of the companies like Bitmain and some others will have a release schedule for new machines. And if you've recently bought these latest and greatest machines, and you find that suddenly there's a machine that's much faster that's come out, it can become worthless to you. A little bit similar to where some of the older airplanes in the airline industry have like a negative value to them just because their fuel efficiency is so low that it's not really worth flying them. The same is the case with mining machines. So I would say that's one of the bigger pain points. The other one is just like stable, steady electricity prices. Now, there's a lot of new work that's being done to integrate Bitcoin into the wider like energy futures market, which should add some more stability there. But I think we're still in earlier days, and it's probably yet to mature to the maximum efficiency that we would like to see.
Yeah. So, I mean, that's why, Frank, it's incumbent for Bitcoin mining companies to constantly evolve their model.
Absolutely. You have that flywheel going. I don't know what happened there. It jumped off.
Oh, I think you are. There you are.
You have to have the concept of Jim Collins' flywheel to catch. So we were mining Ethereum and we saw it going away, and we took our GPU chips from NVIDIA and started doing AI early. You continuously have to be thinking of that. And when you go to build a big data center, like right now in Paraguay, we're building out 300 megawatts of electricity data centers. And over time, those data centers will be used for high performance computing down the road. But what a lot of people jump down the HPC, what they don't realize, it's very, very expensive. Cambridge University said it's 33 times more than Bitcoin mining. A tier one data center for Bitcoin mining is only $1 million a megawatt. When you go tier three, it's 10 million. That's excluding the value of the chips. So you have to be really thoughtful. And it's, as Carter said, it's a big capital spend up front. But I think the Bitcoin miners that understand GPU chips, they're like driving, and the engineers like a Porsche or Ferrari. When you go ASIC chips, that's a Jeep or that's a Bronco. So it's a very different technical skill set you need to if you go down the AI path. But the AI path is huge.
How long does it take to get a data center online?
If you start fresh with brownfield, it can take you 3 years for permitting. If you have already a Bitcoin data center, 9 months, because you have the electric contracts, you own the land, and it's much faster to fund. There's lots of funding capital that will come in if you can fast track that deployment. But the last thing I want to share with you, ASIC chips come into us in 6 hours, Jill. We unlock them, plug them in, and cash flow. In come the NVIDIA chips, 6 weeks, because you're building a brain. It takes a long time to turn around to build out for high performance computing data centers and AI. So it's recognizing those nuances is really important down the road.
Yeah, I think it's a great point that Frank makes, Peter, because from the perspective of an investment, capital will be tied up, right? It takes, and we need brand new facilities, at least 3 years. So there's, investment decisions that need to be made around this as well.
Absolutely. And as we mentioned previously, the regulation helps a lot there. So if there is straightforward regulation in the country and you can come with the investment plan, you can raise money for that. You can list your company that mines. So it's a business case. It's just about building the team, about building the efficiency, and etc. And on the other side, if there is no clear regulation, so you are thinking twice if you want to invest in like 2, 3, 4 years, or you just want to invest something else.
Yeah. Well, I mean, Carter, the fact of the matter is too, technology is just emerging at a rate and velocity. Who even knows if Moore's law applies at this point, being, facetious about that. But, it feels as if the hardware becomes obsolete, quicker than you can keep up with the technology.
Well, I mean, so that's why with Psy, what we're doing is we're ensuring that we're going to be GPU mineable, because worst comes to worst, if you buy a real expensive GPU, you're
Right.
still going to be able to do AI with it, right, at the end of the day. So, and another thing that we're really going after is utilization rates for these AI data centers often varies throughout the day. Everyone wants to use Chat GPT when they're at work, but when they're sleeping, there's not as much activity. So during that period, they're able to use those existing AI GPUs to mine our coins. That way, there's not this issue of constantly having this, giant sort of ever-growing pile of e-waste from the old mining machines that are no longer efficient enough to run economically.
See, and that sounds like one of the pain points that you have with electric vehicles as well, right? Everyone's charging at the same time, and then there's a space of time where it's just sitting idle, and there's got to be other uses or ways to recycle that energy to be applied elsewhere.
Well, of course, Bitcoin, right?
Right. Yeah. Well, yeah, that's a good point, but I think that when it comes to energy, multiple sectors, multiple industries are kind of grappling with the same types of issues. And I wonder, as this, as you think about a year, 3 year, 5 years out, if that's going to be part of the calculus in terms of how we can use this idle time to be more efficient with how the energy is being triaged.
Absolutely. I mean, for us at least, we're building our entire protocol around using that waste energy or that extra energy so that we can take advantage of it, right? Because there is this need. And, fortunately, by taking advantage of it, we're going to be able to pay for it. And hopefully that should sort of stabilize prices throughout the day. So it's not so crazy. But yeah, it's a problem a lot of folks are facing.
So, Peter, to get your perspective, next year, 3, 5 years out, where do you expect the mining space to be?
I think as we saw it in payments business in Mercuryo, so it is coming more institutional. It is about raising money. So you need money to raise to make investments. So it is about intersections with our industry. So Frank talked a lot about AI. So if you are mining Bitcoin, you also should think about how you cooperate with companies that's doing calculations for AI, or you are building also the product for that. So I think that those are main pillars in coming years.
And Frank, we'll wrap up with your perspective as well as you think, the next year, 3 years out.
It's a great question because it's just always moving.
Yeah.
What I do think is that Bitcoin is going to become a critical spoke in the fintech cycle. So when you go to Wall Street, there's many more fintech analysts than there are Bitcoin mining analysts. And you're seeing that banks that have no Bitcoin analysts are all of a sudden funding Bitcoin mining because they look at it as being a spoke, a critical spoke in that fintech global wheel. And I think I mentioned earlier regarding the Genius Act, it will all of a sudden start to permeate with other countries around the world to embrace the crypto mining industry and Web3. And the fintech analysts will be a push for that. And so I remain very bullish. And I think the idea of AI along with HPC, we're going to see, and because we're doing it where we have 80 megawatts in the border of Maine and New Brunswick, we're converting 20 into HPC. So we see that as just a natural stepping stone.
All right. Appreciate all of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.